If you are an employee in a company, you need to become a business owner as quick as possible if you live in the United States. Now, that being said, that does not mean that you should quit your job. That does not mean that you need to go out and start a business. That does not mean that you need to go out and operate a business. But in America, in this economic system, everybody needs to be a business owner because real wealth in America is built through owning things like businesses, not just by working in businesses. Now, you're probably hearing me saying this and you're thinking, what the heck, Jaspreet, are you talking about? None of that makes any sense. Well, think of it this way. When you go out and you work as an employee in a company, you are an expense to the company. Now, I'm not saying this as like, oh, you're bad for the company. No, what I mean is financially, you are an expense. If you don't believe me, look at any cash flow profit and loss statement for a company. Every profit and loss statement for a company will show you that this is the revenue on the top. This is where the money came in from. And then you'll see the expenses. And in the expenses, you will see a line item called labor. Labor is your salary cost for the company. If you're getting a salary out of the company, you are an expense to the company, period. Now you might be saying, but Jaspreet, employees are an asset to the company. Sure, you're right. They are. They're a vital part to growing the company. But financially, just on the numbers, we're not talking about emotions now, you are an expense. And so what you need to do is you got to take the money that you're making as an employee in the company and you need to put this to work. That way you can own some assets too. Now, the way that you do that is you take the money that you're earning and you take a piece of that and you're going to put that to work. Because guess what? Not everybody needs to be an entrepreneur. Not everybody should be an entrepreneur. Not everybody should try to operate a company. It's a lot of work and it's not for everybody and it's very overglorified. Owning and running a business is for people who have it in them and who want to do that. There's no shame in being an employee. And anybody who talks about being an employee as a bunch of crap is really a piece of crap. Anyways, there's nothing wrong with being an employee. So now what you need to do is take a piece of that money that you're making as an employee and put that to work. If you go out and take some of the money and you buy a share of a company on the stock market, you now become one of the owners of that company. If you go out and you buy one share of, say, Amazon, you become one of the owners of Amazon. Now, as one of the owners of Amazon, you don't get to tell Amazon what to do. You don't get to get involved in the day-to-day decisions, and you don't have to go out and start packaging boxes, but you get to share in the profits. The way you share in the profits is by number one, if the stock price goes up because the company becomes more valuable, that means your stocks, your share becomes more valuable. Now, you don't actually make any money until you sell, just like how you don't actually lose any money until you sell. But if your stock goes up and you sell, that's how you make money, which is option number one. Option number two is some companies, not every company, but some companies will pay out what's called a dividend, which is a regular cash payment. They will literally just send you cash or deposit cash into your brokerage account every 3 months generally because you own a piece of this company. Now, not every company pays a dividend. The only companies that are going to pay dividends are companies that have big enough profits that they can afford just giving money to their shareholders. But that's another way that you can get paid. So now, if you are an employee, you don't own the company. You don't have any equity in the company. That's okay. But you need to be good at what you do. That way you can maintain that salary. That way you can maintain that income. And that way you can grow that income. It is your duty now to continue working there to be as good of an asset as possible. Because the better asset that you are, the more your salary is going to grow. Yeah, that means you're a bigger expense. But they want to pay for that expense because just like every other expense in the company's profit and loss statement, they have these expenses to run and grow the company. So now, if you can build yourself up as a good asset, as you can grow the income that you can make, you have more money to go out and invest. Now, a simple rule of thumb, you can find the right one for you, is to follow something like a 75-15-10 plan, which says for every dollar that you earn, 75 cents is the maximum that you can spend, 15 cents is the minimum that you invest, and 10 cents is the minimum that you save. The reason why you want to do this is because now no matter how much money you're making, whether it's 25 grand a year or $2.5 million a year, you're always working to invest your money first. Now, where can you invest your money? I talked about how you can invest your money in stocks. You can also invest your money in places like real estate. You can also invest your money into other startups. There's a lot of places where you can invest your money. It doesn't really matter where you invest, but you want to be investing your money. Now, ideally, especially if you're just starting off, you want to invest your money into places that are a little bit more established, places like the stock market, places like real estate, and don't just throw your money around. I mean, you can if you start, but understand that investing is risky. You're never guaranteed to make money when you invest. And in fact, you will probably lose money at some point, but you got to get started. That way you can learn. Now, I'm not going to do a full deep dive of how you start investing in this video, but we have a free ebook in Market Insiders where my team breaks down how you can start investing, how you can start generating cash flow, and how you can put your money to work. Even if you don't have a ton of money, this ebook is completely free. So if you want to read this ebook and learn more about how you can start investing, you can go to marketinsiders.com, and I also got the link for you down in the description below. But this is where now the key is putting your money to work and own the assets. If you don't own the company where you work at, you need to own somebody else's company, period. In this American economic system, that's how wealth is built. And the great thing about this system, if you understand it, because most people don't understand it, which is why they hate the whole system, but if you understand it, you can own a piece of the system without having to work to necessarily own each individual pieces of those systems. Once you have the money, you have the tools to buy a piece of that. Now, yes, that means you're going to have to work to spend less money. Maybe that means you have to work to earn more money, but you got to take some of the money that you're earning and put it to work to own a piece of the system. That way you can actually build wealth from the system, because if you don't, then you're just constantly going to be an expense in the system and never own any assets for yourself. That's where wealth is built. You already know you're working in a company. When you're working in that company, you're working to make the company more valuable. You're working to make your boss richer. That's a fact. But if you want to make yourself richer, you got to continue doing that, continue putting in the value, continue making that increase in your income. That way now you have more money to go out and own your own assets. That way you can own a piece of the pie as well. That's how wealth is built. And this is where you got to figure out what is the right way for you to do this. Now, this is where the financial education comes into play. Like when it comes to the stock market, you don't have to go out and try to find the perfect company unless that's something you're really interested in doing. You can just invest in a piece of America. There are funds, index funds, ETFs. Both of these things will allow you to own a piece of America without having to spend all that time, effort, and energy researching individual companies. Like there are funds on the stock market, index funds and ETFs that will allow you to own a piece of the total stock market. There are funds that will allow you to own a piece of the S&P 500, the largest 500 companies on the stock market. There are funds that will allow you to own a piece of healthcare companies. There are funds that will allow you to own a piece of real estate companies. There are funds that will allow you to own a piece of companies that are focused on just paying dividends. This way now, if you don't want to be a professional investor, you don't want to have to research individual companies, you don't want to have to try to pick the best company, you don't have to worry about your portfolio, just find the right industry or fund that you want to invest in, which is significantly less work. And now every time you get paid, just take a piece of that money and start putting it into these funds. That's where wealth is built. Now, of course, you can get started with something like a 401k, something like an IRA. These are tax-deferred retirement accounts that make the process of starting investing very simple, because lots of employers are going to offer these to their employees. They offer some tax benefits. There's some pros and cons to this, but that's just where you get started. You don't want to stop your investments just because you have a 401k or an IRA. That's just where you start. Get started with that because that's the most accessible, but then I want you to go even beyond that and continue investing yourself. Now, again, I want to remind you, investing has risks. You're never guaranteed to make money you invest. In fact, you will probably lose money at some point, and never blindly trust a random guy on YouTube, but understand that because you will have to lose money at some point because that's a part of investing. But the goal is to make way more than you lose. And the only way that you can do that is if you're willing to lose and you understand that that's a part of the process, because investing is a skill that can be learned. And patience is important. But you're never going to have that motivation to want to learn until you get some skin in the game, meaning until you put some of your own money into it and get started. And one of the most powerful assets, one of the most powerful tools, one of the most powerful values that will determine how wealthy you will become is time. The more time your money has to grow, the wealthier you will become, which means the sooner you start, the better, even if you don't have a ton of money. Listen, you don't need thousands of dollars to get started as an investor. You can get started with as little as $1 now. Thanks to the apps on the internet, you can start investing into these funds like I talked about with just $1. but you got to get started. The key is consistency. Don't just put in $1 and expect the $1 to turn you into a millionaire. You got to put in the $1 and then put in another dollar tomorrow, and then another dollar the day after that, and then start putting in money regularly, weekly. Then start putting in more money as soon as you start earning more money. The quickest way to start investing more money is next time you get a pay raise, don't inflate your lifestyle. Take that pay raise and take at least a piece of that, if not all of that, and put that money into your investments. You can't show it off the way you can a Rolex. You can't show it off the way you can a Gucci belt. But if you stay consistent with it, those investments will start to grow, and that's what's going to buy you the real financial freedom. It's not getting a big pay raise, because your pay raise is really fleeting, because if your company goes bankrupt or if your leg breaks and you can't go into work, that salary disappears. But your assets will still be there. Even if you can't go into work, even if you break your leg, even if your company goes bankrupt, your assets are still there. And that's where you want to have that strong portfolio of assets that you're working to build with your salary, because that's where wealth is built. There's been a lot of talk recently about the real and root cause of inflation, where you've had a lot of media articles saying that corporate greed is what's causing inflation, and it's the reason why inflation is still here, and it's the reason why inflation is not going down. That corporate greed, wanting to maximize their profits, is why we are seeing